All right, so as it relates to the stock market, things are happening, and as it relates to the real world, things are also happening. Subway is one of the biggest franchises in the world, okay? And make no mistake about it, Subway is a multi-billion-dollar industry, all right? When they first came out with the $5 sub, they really launched themselves, they catapulted themselves into the stratosphere as far as restaurant brand names go. Because with that $5 sub, which is not available anymore, by the way, which is a sign of the times that we're in. It lets you know how bad we've gotten as far as inflation goes. But when they released that $5 sub, right, everybody was like, man, Subway is now affordable, right? Subway, I'm going there for lunch. It was quick. You go to Subway, grab you a $5 sub, maybe get something to drink, maybe get a cookie or something like that, and you were out the door only paying $7 or $8, right? And you pretty much got a full meal. It's $5 foot long, right? Now things have changed. Subway has reverted their prices, and they have amended those prices, rather, I should say, and it's a little bit different. But Subway still, even with changing their prices and getting rid of the $5 footlong subs, they have remained at the top as one of the staple brands as far as fast food goes in our economy. It's number 7, I believe, on the list as far as revenue is concerned. So I want to go over this article because this is going to play into, this play that took place about a week ago, or the article was released last year, at the end of last year, but it hasn't. I don't think it's happened yet. I think they just took over Subway. But anyway, listen, this play could be potentially a big deal for the market. I'm gonna explain why. But first, I want to read this headline. It says Subway has been sold for billions in one of the biggest fast food acquisitions ever. Okay, and they have been acquired by a company called Roark Capital, and we're going to get into Roark Capital in a minute, so I can give you all a broader scope of exactly what Roark Capital is. But I want to read a little bit of this article. Subway, a family-owned business of nearly 60 years that has other sandwich shops in its portfolio, has been acquired by private equity firm Roark Capital. The sandwich company announced in a press release Thursday that it had received an offer from Roark. The Wall Street Journal reported that Roark offered $9.6 billion for the sale, which originally was listed for $10 billion back in February. Subway must meet cash flow milestones within 2 or more years after the deal is finalized to pay the entire $8.95 billion deal price, according to Reuters. The deal does not include the earnouts. According to CNN, the acquisition by Roark is a significant event in the fast food industry. The company boasts a $37 billion asset value and an extensive food portfolio with investments in brands such as Arby's, Auntie Anne's. I love Auntie Anne's. I don't know if y'all have ever been there. What's going on with mine? Let me figure out what's going on with my computer right now. But Auntie Anne's, I love Auntie Anne's. It's the pretzel place. I don't know if you all have been. We all know what Arby's is. Arby's is really, as far as the fast food industry goes, Arby's is really slept on. Okay? Arby's is really slept on. I still don't know why Arby's gets the hate that it does as a restaurant, but Arby's really is that deal. All right? I love Arby's. Buffalo Wild Wings, we all know. Carvel, Sonic, we know Sonic, and many others. So those are just a few of the things that are within this Roark, that are companies that are under their banner. Subway says it will continue to prioritize sales growth, menu innovation, restaurant modernization, enhancement of the guest experience, and global expansion. So, here, I want to parlay that right into Roark Capital, okay? Because Roark Capital is considering, okay, they are rumored to be seeking an IPO address. In other words, they are rumored to be coming to the stock market, all right? They are rumored to be getting an IPO on the stock market, going public, okay? That is essentially what it means. They are rumored to be going public with an IPO, which means that you and I will be able to purchase shares in the company, considering that a deal or some type of announcement is made, not a deal, but some type of announcement is made over the course of the next couple of months. So it's definitely something to keep our eye on. But I want to get into pay a little closer detail into what exactly Roark Capital is involved in. I want to give y'all a broader scope of exactly what it is that they own. So Unibond, I don't know anything about this. Apparently it's in Canada. I see Canada under there. But Auntie Anne's, as I said before, Buffalo Wild Wings, welcome to Moe's. I don't know anything about this company either. I have heard of Bosley's, the pet value company, Sonic, of course. YEB, Youth Enrichment Brands, don't know much about that either. Inspire Brands, I do know about that. I have heard of them. 1-800 Radiator, don't know about them. Carvo, I don't know. I don't think we have a Carvo here in Michigan. I haven't heard of them either. U.S. Sports Camps, Meineke Card, definitely heard of them. School of Rock, Pet Value, definitely heard of them. And U.S. Baseball Academy. So those are just a couple of the different things that they own. Of course, there's much more. They own Cinnabon as well, I believe. I love Cinnabons, man. Listen, I'm a foodie, so anytime there's food involved, you damn near got me as a customer. But listen, I said that to say, well, and now you can add Subway to that, because I said that to say that this company is growing. They're making acquisitions, and they just made one of the biggest acquisitions to their portfolio in purchasing Subway. And I want to give y'all a little bit closer here. Here's a real-time list of the things that they own, okay? Anytime Fitness, these are the current investments. The Cheesecake Factory, we all know about the Cheesecake Factory. Really good cheesecake. Culver's, I like Culver's too. Driven Brands, Divisions Maintenance Group, a couple of the other ones that I haven't heard of that I'm not too familiar with. But listen, Dunkin' Donuts is on that list. Jimmy John's, Baskin Robbins. Those are all household brands and names, all right, that we are all familiar with. And these are all brands that are under this company, Roark Capital. And they have just acquired Subway in over a $9 billion acquisition. And it is rumored that, again, they are seeking to gain an IPO. It says with the proposed valuation of $20 billion, an IPO for the parent company of Dunkin' and Arby's will be one of the biggest in the sector in over 20 years, you all. This could be a big deal, and it could be a big opportunity for you and I, the investor, especially if they come out paying dividends. I'm definitely going to be keeping my eye on this. So it says a dive brief. Roark Capital is considering taking Inspire Brands public later this year or in 2025, depending on market conditions, according to Bloomberg, which cited people familiar with the matter. We remain focused on growing our business and creating long-term value for all stakeholders. We have no comment on potential future changes to our capital structure, a spokesperson said. Inspire could be worth $20 billion in a listing, making it one of the biggest restaurant IPOs in over 20 years. Listen, right now, I think the biggest one that I know of is QSR, and I believe the QSR, they own a lot of different restaurant brands, but some of which have gone out of business, like Denny's and Popeyes, or is it KFC? They have a nice little portfolio of their own, but the QSR stock hasn't been doing well over the course of the last, I want to say, 5 years anyway. But listen, it says Inspire Brands, which includes Dunkin', Arby's, Jimmy John's, Sonic Drive-In, and Buffalo Wild Wings, has over 32,000 restaurants in its portfolio and over $31 billion in global system sales. According to its website, it is the second largest restaurant company in the country, according to 2022 financial results. Late last year, Inspire changed its corporate structure to focus on 3 discrete areas of business: brands, commercial, and company restaurants growth. This move sought to leverage a shared services platform across its brands. This week, Inspire bought Vromo, don't know what that is, a delivery tech platform, to make delivery more profitable for its concepts. While no final decision or public statement has been made on the matter, the possibility that Roark is considering an IPO for one of its biggest companies indicates a shift in market conditions. After a flurry of restaurant IPOs in 2021, no major restaurants went public in 2022 as interest rates rose. Again, this could be a potentially big deal, since Roark has been actively growing its restaurant brand portfolio with a proposed $9.6 billion buyout of Subway in 2023, a few years after Inspire Brands bought Dunkin' for $11 billion. Again, so they have been ramping up their acquisitions. They invested $200 million in the Cheesecake Factory as well. So this could be a big deal again for investors. So this is definitely something that you would keep your eye on. I'm definitely keeping my eye on it, especially again if they come out the park with dividends, y'all. I'm definitely going to be interested to see how this company does, how they're going to grow. It could be a great value or growth buy-in opportunity for the investor. This here is the QSR list that shows the rankings of the top companies. Number one, you'll see McDonald's. Of course, I've talked about McDonald's plenty of times on this channel and in my videos. Love McDonald's stock. Love McDonald's as a company. They're just a mainstay. They're a staple. McDonald's is a company that you don't mind owning for the next 20 to 30 years. Starbucks is number two. Chick-fil-A number three. That was surprising for me. Taco Bell number four. Wendy's number five. Dunkin' Donuts number six. And number seven, Subway. So at number 6 and 7 on the top companies by revenue, again, Roark Capital IPOing would be a big deal. You have 2 of the top 10 companies in the world wrapped up under this particular brand. So yes, I absolutely think that this is some major news, considering that they could possibly IPO over the course of the next couple of months or within the next year. I just want to read what Subway was doing in 2022. It was another eventful year for the country's most ubiquitous restaurant. Subway finished 2022 with 20,576 U.S. stores after closing a net of 576 units. While a large chunk, it was the brand's lowest rate of closure since 2016. Subway shed a net of 1,043 units in 2021 and 1,600 or so in 2020. Even at its lowest total count since 2005, Subway remains the largest chain in America by some distance. Starbucks is next at over 15,000 stores. It says, additionally, in April, Subway reported its 9th straight quarter of positive same-store sales. It credited positive traffic and double-digit sales growth to menu innovation, modernized restaurants, and digital improvements. First quarter same-store sales increased 12.1% year over year, and digital sales hiked 11.4%. Global digital sales have more than quadrupled since the start of 2019. And to start April, Subway accomplished its highest weekly U.S. AUV since 2010. Speaking of menu innovation, the brand is in May announced the first update to its Subway series since the curated. All right, that's pretty much it, y'all. I just wanted to chime in on this because I think, again, this is a big opportunity. This could possibly be a huge opportunity for the investor, for you and I. And again, if they pay dividends, that's going to be definitely something that I will look to possibly add to my portfolio, considering that they come out and they're hitting on all cylinders with this IPO. I want to see what the price is going to be when they drop. But again, something to keep your eye on. All right. Thank y'all for watching. I'll see y'all in the next video. Okay.